365, shake my hand, and good afternoon to War Room 45, first War Room of the year 2022. Hope you guys are doing well. Thank you for your patience with me. It's been crazy. I've been trying to just balance out a lot of things, reset the year, recalibrate the academy, and I've got a lot of interesting stuff going on this year. But in today's video, I'm going to walk you guys through positional positions. We're going to look at what the banks have been doing since September the 7th of last year into the new year, 2022. Then I'm going to let you know how it is that we can start to situate ourselves in the markets. I have not taken a single Forex trade this year. I've got positions running, but all those are 2021 swing positions that are still continuing. In terms of new trades, I'm going to be taking most of them together with you on this channel. About 50% of them will be shared on this channel. The entire trading structure of all my trades is going to be up on the 365 remote course and on the 365 Discord. More information coming around the Discord, by the way. But we kind of like, yeah, changing the way we do things, but most of the benefit will be towards the students, right? So if you are a 365 student, you've been very patient, I appreciate you. It's time for me to get back to work. I'm finally ready. I've got all the data. So today's video, guys, shake my hand, by the way, shake my hand. Sorry, we're not doing this live. I just wasn't sure if I do it live, if I could handle the questions, the Q&As, and also time. Because sometimes when I'm doing things live, I worry about time. I worry about talking you guys to death for like 4 to 5 hours, and you guys are just stuck there with me. And I appreciate that, but I just really wanted to do a pressure-free video breaking down all this data. So I don't want to waste too much time. I want to do it. As soon as I'm done with this particular video, I'm going to send it up on the YouTube. You're going to be seeing it right now, whenever right now is for you. Watch out for a follow-up. So the first assets I want to do in the next War Room follow-up is going to be AUD, NZD, CAD JPY, Euro JPY, Pound CAD, NZD Swiss franc, currency indexes, gold, and Nasdaq, right? So there's about 7 big asset classes. Then we're going to move to the next and move to the next and move to the next, right? And we're going to cover every single play that I'm looking at. But before you can take a single trade this year, this is the most important video you're going to watch. Sometime during the week, I'm going to do my part 2 of how easy it is to make money. I do that at the beginning of every year, and that's long-term investments. If you want to be a millionaire in 365 days, put money here and hold. It's that simple. That's all. That's all you have to do. It is literally, that's all you have to do. So look out for that video. But for my day-to-day traders, my swing traders, 365 traders, Forex traders, crypto traders, we are going to break down all these assets and these components in the next following days, so that by the end of January, we are crystal clear on what the mission is, okay? Now, my target, and I've been discussing a lot of this in the new podcast, is 743,000 US dollars by the end of the year in my personal accounts. You will see all my personal accounts. Well, not all. You'll see the 2-3 personal accounts I'm going to be using to kind of like get to this target, right? So how to 5x, 2x your trading accounts and 2 is coming back, where every live trade I take will be recorded. But the interesting part is if you're an academy student, everything's going to be on the spreadsheet that I'm going to show you. There's going to be a live feed to that spreadsheet into our remote course that you will literally see the trading plan, the trading entries, the stop loss, the exits, the cluster number. And that's what I want to talk to you guys about in today's video, so you understand how I'm operating, but more importantly, you do it for yourselves. When it comes to trading psychology, you have to manually hack trading psychology inside your trading and have mechanisms that allow you to stick to the path, right? So this big master, I call it the Master Traders Spreadsheet, has been an enormous help to me. I've been developing it, you know, adding elements, taking things away for the last 1.5 years when I was designing module 3 for most of you, right? And it's finally, everything is coming together quite nicely. Okay, so, you know, in terms of introductions, I think we're very good. We're ready to go. I mean, the most important announcement, very, very important announcement, it is my heart's desire. It is my heart's desire. In fact, it will happen on Tuesday, the 1st of February. I'm going live teaching on trading psychology. That means whether you're a 365 student or not a 365 student, that's something you need. As long as you're a trader, you need to actually come learn about trading psychology, right? So this is going to happen on the 1st of February. If you are a registered student, already registered, please do not submit your name or click on the general public link, because the general public link will come with a fee of $100 US. If you want to join our trading psychology module, it's going to be $100 US. But registered students, that is not the price for you. We've tried our best to keep it as close to zero for registered students. We've absolutely tried our best. You know, one of my biggest mistakes last year, and also meeting my biggest goal, was to do everything intrinsically free or as cheaply as possible, so as to maintain a consistency of adding value. And I want to carry that over this year, but I also don't want to sacrifice time for money, so I need to balance that out. But if you're not a registered student, and if you only want to do the trading psychology course, and please note, there is nobody who's going to teach it to you the way I will. There's nobody teaching it in general. It's only $100 US. If you're a registered student, we're still debating about it. I want to keep it at zero like it was for module 3, and module 4 is our trading psychology, but we will see. An email will come out Monday, tomorrow, absolute latest. The point is, I need everyone who is interested to register so we can get you guys accredited as quickly as possible. We'll go live on Tuesday, maybe live on Wednesday, and then roll out the entire course on the remote course so that everybody is up to date. It's going to last for the whole month of February, so about 4 weeks of just really getting to the trader's mind, hacking your brain. And it starts with this. So if you're not 365 and you're not going to take the trader's course, at least you're going to get a few hints and bobs of what we're going to be doing here. All right, so let's get started. Let's get started. I see time is moving. All right, so everything that I'm about to show you, you're going to have access to it, by the way, as a 365 student as of tomorrow or tonight, Mondays, because once I do this video, I'm just going to upload it. But I want to break down the plan. I want to break down the plan. And my plan is going to be centered around my affirmations card. So at some point, Mr. Ronald Marks, forgive me, buddy, I know you asked me to create and curtail a video around my meditation process as a trader, right? And I haven't. This is built around my affirmation process as a trader, how I affirm myself and reach my targets, right? And I will do that video for you guys this week as well. Okay, so in front of you guys is, you know, parts and pieces of a spreadsheet I've been promising. I'm going to do this with 2 specific accounts, account number 1 and account number 2. I'm going to be doing what we've spoken about many times in this channel, trading in clusters. So trading in clusters means if you've got $100 US, I don't know. I mean, I've explained myself, but just in case you're new, to the channel, if you've got $100 US as trading balance, you don't want to just keep buying and selling, buying and selling, buying and selling, buying and selling the FX market. And your equity map looks like this: win, loss, win, loss, win, loss. And then eventually you've blown your account and you have no idea. So you start off with $100 US capital here. And then let's say this is 20. I'm sorry, it's untidy, 30. So this will be the profits you're making along the way in the account up to 40. So at some point you made $40 US on a trade, or it accumulated to 40 bucks. So you had 140. Then at some point you almost lost it all. And then you came back up. And then eventually the highest you made on that account was $60 US. So you had 160 at some point before losing it all on a bad trade or on a bad series of trade. This is a very common thing. This is literally how every retail trader operates. They start off small, and then at some point in time, greed takes over. God factors take over, where you think you're a god in the markets and you control everything. Multiple signal services take over. Whatever happens, it stuffs up the trajectory of your account. Nobody has a perfect equity graph that looks like this, right? Where you start off with $100 US and oh my goodness gracious, you never lost an account, a trade in your life, and you now have $1 million US. Nobody ever looks at that. But what I am saying to you is this is also equally not acceptable, where you keep blowing and losing. This is not okay. This is not normal. It is the norm, but it's not normal. And it definitely shouldn't be anything normal for anyone who is subscribed to our channel, right? If you're following 365, last year, this is War Room 45. Last year I did 44 war rooms. So I'm looking to double that this year. So there'll be a lot of aggressive content coming out, asset by asset, chart by chart. I'm going to do scenario analysis on the YouTube. I'm going to do a lot of things. So please stick with us. Now, I would expect you to have a gradient graph that looks like this. You'll have the usual ups and downs, what Mark Douglas calls the normal equity curve. But in this ups and downs where you're winning and losing, what you want to see is your capital to start to do something that looks very similar to this. So what the goal of trading in clusters does is, number one, it reduces the need to keep refunding. You want to start off with some type of capital that you're going to keep as capital and not lose in the markets. Number two, allows you to grow your account. But number three, it helps you pick up mistakes. You need a system that can pick up mistakes before the mistakes are more than your trading capital. The moment mistakes are more than your trading capital, your account is gone. There is no going back. If you have more stop outs, more stop losses, no red flags, you don't have a system in place that lets you know, dude, stop. It's just not working. Listen, I know that guy told you that indicator is going to work. It's just not working for you. Support and resistance, it's just not working for you. But it's not enough for Leroy, a stranger across YouTube, to tell you that. Trading in clusters with my spreadsheets will communicate it better to you. It'll say, this is us. This is me, the trader. I did this 10 times. It did not work. You have to be extra stubborn to look at data like that and not want to change. And if you're one of those people, I guarantee you, I can't help you. So this year, I also want to be upfront about the things I can and cannot change. I cannot change your stubbornness. I cannot change your reluctance to try something new, even though what you know hasn't worked for you for years. I can't change that. Like, I'm not a gifted therapist, and even in therapy, they'll always tell you they're not here to change who you are. They're here to give you a perspective so you can choose better for yourself. Choose better this year. Not only the trading course, but just choose better for yourself. I'm running a podcast by the side. It's a free podcast. You can stream it on Spotify. I'm pretty sure every episode will have a corresponding video on the YouTube channel. I stream it every day to help you to start thinking better so you can start choosing better. This is all well-rounded to get those of you who want to become profitable traders. Why am I doing this? Well, because I want to do it. I enjoy teaching, number one. Number two, there is a stagflation in my academy. We have been stuck at 180 millionaires that I've made, right, since I started teaching, and that number isn't necessarily going up or going down. And at the base of it is an education group where some of you are starting to show promise that you're about to break out, but some of you need some assistance, and that's okay. That's the whole point of mentorship. Now, I need to know sometimes how I can meet you at your point of need. So this year, I've got 2 more senior traders who are joining 365 to reduce the workload on my plate so I can focus on my academy, right? Last year, that was impossible, right? It's absolutely impossible. I was handling quite a lot. We've got corporate clients. There are a lot of things at stake sometimes. So now my goal is to double this number by the end of this year, and that's possible. Not only is that possible, it literally would mean currently most of the current registered students who are not yet in this group would become 6-figure traders. That's my goal for the academy. If the academy happens to grow during the year, that means if we get 10 more students, 5 more students, that's perfectly fine, but we're going to work out their journey. But my goal is for the current registered students to realize senior tradership status, all right? And you all know, or if you don't know, it's not like they have to pay more. It's the mentorship program. It's me paying more attention, me being more present in their lives, etc., etc. And I finally worked out a pathway around that. You must remember, I don't trade on behalf of individuals, but I am running a full trading corp where we trade on behalf of serious companies, and I can't drop numbers there because I'm split-minded. All right. So hoping that the 2 new extra manpower that I have hired, they started working this past Monday. I'm very happy with the team. The benefits will start to roll into our registered students' life. Right. So trading in clusters means, let's agree, after every 10 trades you stop, or 15 trades. or 20 trades. It's a simple concept. It is a powerful, simple concept. And what it means is it doesn't matter if the first 10 trades you took were all wins. You still stop. You stop and you assess what was done good, what was done great. Out of those 10 trades, how many of them are your original ideas? Don't just float on Leroy's boat. Don't just float on Leroy's signals. Join the 365 community. If you're registered, please. I see you guys talking a lot in the private group. I appreciate that. You are molding and sharpening each other. It's so important. I cannot emphasize how important that is. Was it 6 trades that I gave you and 4 that you figured out yourself? Did you maybe, out of this 10 here, win 5 and lose 5? All these small stats about your trading are a big reflection about your decision making. Your decision making is a big reflection of who you are as a trader currently right now. We need to judge that person. You need to judge that person. Am I a good trader? Am I an okay trader? Am I a bad trader? Whatever the answer is, you get to create a roadmap, right? There's nothing wrong, there's nothing right, there's nothing bad or good. We are simply trying to find you exactly where you are so we can pull you up. If you're currently a 40% winner, 60% loser in the market, that's brilliant. How do we get you to be a 50-50, a 50 winner, 50 loser, and then flip that to 60-40, a 60 winner, 40 loser? You cannot do that if you're not tracking your trades in a manner that makes sense, called trading in clusters. So I've prepared this beautiful spreadsheet for you. I've lost it now. Well, I haven't lost the spreadsheet. There we go. I've prepared the spreadsheet for you just so that you know exactly what it is I am talking about. The spreadsheet will be up in our remote course from tonight. Everyone in the academy will have access to it, right? So let's quickly break some stuff down, because I really, this first war room is to explain this. This is very important, and to start to look for trade calls. And we're going to talk about patterns in the dollar, in this, in that, in that, in that. And then we're going to see from there where it takes us. But perchance, perhaps, if you can rock with me here, I've got a 25,000 US dollar account, number one, and then the small account that I have is 6,000 US dollars. So I'm going to be using these 2 accounts to structure a lot of education stuff. These are all my live accounts. You will see them. You've always known me to share the live. For those of you who are doubters and believers, you can just go through our YouTube videos. This is homemade ginger. And I'm running out. Right, so this is actually quite important, right? Because I need you to think through your capital this way. I know you're really getting distracted looking at the numbers. I'll explain everything. Just really pay attention. I need you, when you finally get this spreadsheet, you're going to have to rework it just a little bit for your trading capital. It's that simple. Now, I've got, for the 25,000 US dollar, I'm going to start here. These are my notes. 1% of 25,000 US dollars is 250. Right. Now, the rule in the academy is if you cross over to 10,000 US dollars and up, you can't risk 5% per trade. That's too much. Don't worry about the leverage people, the over leverage people, the people who use 100 standard lot size on social media, the fake demo traders, the fake mentors, the fake what. It's not going to work. You are never going to grow your account at that particular rate that you see on social media if you don't have the actual background foundation of the stuff. So I always want to know what's 1% of my account, because 1% of my account, 1 to 2% of my account is a good thing. If you've got a small account, like 100 US dollars, 1% of 100 US dollars isn't going to move that 100 US dollars any further than it is already. So for small accounts, we say risk about 5%, right? So 5% of 100 US dollars is $5 per trade. All right, it's already quite a lot. I would never risk 5% of 25,000 US dollars. I never would. I could absolutely never. Right. But so first of all, I want to know we're here. I hope you guys are with me. I hope I am sharing the spreadsheet and we're all together. Right. Cool. So you see there, B, this whole area. This is where 1% of 25,000 US dollars is 250. So you need to figure out what 1% of your capital is and see if it's worth going the 1% or it's too little, right? Number one. But I go further and then I say 1% of what can be lost or 5% of the account, right? So I am not interested in losing more than 5% want to double check this, guys. I've been working on these spreadsheets like a crazy person at night because I've been doing team building for 365 during the day. So maybe I did the math while I was asleep. You can just excuse me for 2 seconds while I make calculations. I'm a genius. All right, everything's correct. Right, so that's correct. So I only want to lose 5% of 25,000 US dollars first. That's my cutoff. That's my maximum level of pain. Like, oh my God, my beautiful 25,000 US dollars is gone. I do that when I am losing 1,250 US dollars. 5% of my account is the maximum pain I can take. So when I'm designing, listen guys, I'm teaching already. When I am designing my lot size is not based on my capital size. No, my capital is my gold. My capital is the mother of my children. My capital is the most precious thing. It's that one thing in life that I can't duplicate. I can never make more of. If it is the last money, if it's all the money you had, you would not want to risk it. So the sum total or the percentage that I derive my lot size is not what is 5% of 25,000. No. Let's go to the whiteboard because I feel like I'm already not coming across clear and I want to come across clear. Now, rock with me. I got 25K and I'm telling you that 5% of 25K is 1,250 US dollars. All right, fantastic. Now we know what 5% is. And I've taught about this, in my module 1. Obviously in module 1, module 2, it's really catered to retail traders with very small accounts. So it's not a contradiction. I'm saying if you've mastered my course, good for you. But I want you to understand my lot size and process. So this is 5% of my full capital. At the back of my mind, I also want to know what 1% of my full capital is, which is 250 US dollars. Now, if you go blank and blank with module 1 in the course, you would assume that I am saying for every single trade, you have to risk 1,250 because that's 5%. And this account is technically big enough for that to happen. It just sounds crazy for someone like me, because if the bigger my capital, the less risk I should be putting on the table, because if I can just swing and hold, the markets will make the money for me. Let the markets make the money than me risk more. So what I do in a situation like this with an account this big is, now that I know what 5% is, I make this my maximum pain. Maximum pain. You ever seen in the movies when they're interrogating the toughest US soldiers and the toughest, excuse me, and the soldiers acting like they're not gonna break, and all the terrorists say one thing, everybody breaks. This is my breaking point for this account. If I lose 1,250, I'm like, whoa, what's going on? So it is not my lot sizing. In fact, even though I have 25,000 US dollars in the account, I am going to be trading my maximum pain. Do you understand that? My maximum pain is the capital, because it's all I'm willing to lose, right? In this first cluster or in the next set of classes. If it's all I'm willing to lose, then I have to pretend what's 25,000 minus 1. There's one of those videos that's going to get like 90 views. And yet it is so important, absolutely crucial to your trading, right? So even if I lose this, if I lose 1,250, I still have 23,750 US dollars. I got a lot of capital to go, but it's my breaking point. It's where I give up and tell all the secrets to the world, to the terrorists here. This is my maximum pain. So I'm going to derive my lot size profit here. This is how all 12 traders, okay, now they are 14 with the new 2 that I've added. This is how all 14 of my traders operate. I give them 200,000 US dollars, blah, 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 to grow my capital up to the end of the year, but I create a maximum pay. When you hit maximum pay, you and I have to have a meeting. We need to figure this stuff out as quickly as possible, because you can't always hit maximum pay. When you break, you die. In that scenario of the terrorists, right? They kill you so after you tell the secret. So this is the capital that I want to operationalize. Not all of this. This is the capital. I want to see it give me profits before I expose my entire tray of eggs. I need to see supply and demand work for me in a cluster, in a series of clusters. So I know my trading strategy is legit. My mentor didn't lie to me. This stuff actually works. Markets are obeying supply and demand the 365 way. Therefore, why can't we turn this level of maximum pain to ×2, to ×3 before we put the entire tray of precious eggs to risk? I hope that makes sense. So in doing all of that, and I was just wanting to make sure you really understand the spreadsheet, the way it's laid out. Moving forward, I say, look, 1% of what can be lost, which is the 5% of the account, is 1,250 US dollars. Now I've set a target. Because 5% maximum pain is 1,250, my target is 8% growth. I want just a little bit more. I know I'm starting off with 25,000 US dollars, but I only want to risk 1,250, not per trade. That's everything I want to risk. And I want to grow it. I want to grow my 1,250, which is what I want to risk, to 2,000, which is 8% growth on 25,000 US dollars, 8% growth on that. So I like trading in clusters of 20. It might be different for different people, but if you're taking this journey with me this year, let's stick to the same thing. Let's all do 20. Why? The calculations might get complicated later on if you go 15 or 30. 30 is starting to get a bit too big. You need to be able to catch yourself. Number one. Number two, it can't be an arbitrary number. I'm just going to go with 9 trades, right? You have to calculate how many trades and what the win rate percentage is, and I'll show you how that works. So for now, before I show it to you, just so you know, I'm operating in 20 trades at a time. So one cluster is 20 trades at a time. That means, as I continue, 1,250 US dollars, which is my maximum pain in this account, divided by 20 trades is 63 US dollars. Oh, right. So now I know per trade how much I want to risk. I want to risk 63 US dollars per trade. Right. Now, if I am risking 63 US dollars per trade, which is equals to 5% risk per trade of only the money I can lose. I can never, you should never be a trader or an investor and be absolutely okay with losing everything. You can't lose everything. You can't be okay with losing 25,000. I am only okay with losing 1,250. 5% of 1,250, or even better, 20 trades. 1,250 divided by one cluster of 20 trades is 63 US dollars. So I've got it now. So now my focus is going to be on mechanical rule-based trading. Module 1 and module 2, module 1 and module 2, module 1 and module 2, module 1, master the basics, module 2, trader's edge. And in there, we know the number one rule for trading is risk to reward ratio at a minimum has to be 3:1, which means for every single trade in the cluster, which is 20 trades, I can only risk 63 US dollars per trade, maximum. But every single trade I'm going to take, because I've done the course and I've mastered module 1 and module 2, that's all you need to trade. Module 1, that's all. Please, don't be lazy. You've been waiting for me to drop a war room video. I hope when you were waiting, you were reviewing the course material, you were renewing your mind, you're going back to the rules, because we're here now and we're going to move now, right? So you've had a lot of time. Those of you who just joined, it's all good. I'm coming to you. I'll take care of you. But those of you who've been with me since last year, you know what to do, right? So risk reward ratio of 3:1 means as I am risking 63 US dollars per trade, I am only taking trades that will give me a minimum of 189 US dollars. Why? Because 63 times 3 is 189. So if I'm going to risk $1 in the market, I want $3 back. So all my take profit targets in line with my supply and demand zones, in line with my trading assets, in line with my analysis, must allow me in a cluster of 20 trades to risk 63 for 189 at a minimum. Can I go over to 300? Absolutely. As long as you know how to profit a trail stop to get that 189. What happens is, if we can move on to this area now together, I hope everyone is following me. Hit me up in the comment section. I want to do a part 2 of this, answering questions. So if you're not clear, hit me up in the comment section because I got you. If you're not clear, hit me up in the comment section because I got you. Perfect time to like, share, and subscribe if that's fine with you. Right, so now to really break this down, what does it mean? You see, you trade, you plan the trade, then you trade the plan. I can't deviate from this. And I have it in a spreadsheet to remind me. Now, if I have 100% win rate, what's a 100% win rate? It means in cluster 1, if all 20 of my trades are successful, and in cluster 1, I followed the rules, which you should. Remember, if you join us and you follow all the rules and your account doesn't grow, from the day you join us up until 1 year from that day, you get 100% guarantee. That means you get all your money back. If you can prove me wrong, you can prove my rules wrong, I guarantee you. Look, I'm willing, I literally am ready to give you an entire registration. You submit your trading statement, I look at your trades, I check if you followed the rules, and if you followed the rules, you get your money back. It's that simple. That's how sure I am of this. I'm telling you this because I need you to put full faith, full trust. There's no more time to doubt. It's time to grow your trading account. Now, 100% win rate means in cluster 1, my 20 trades, I had $63 that I put to risk, and I won all 20 trades. Each trade was giving me $189. Each trade was giving me 189 because a minimum. So 189 times 20 is $3,780. Wait a minute, what's the target? We've got an 8% target on this account. For us to know our cluster is working, our methodology is working, that we're not crazy and we're not going to blow our capital. Remember, if you're a pro trader, you're trading other people's money. Someone is trusting you with their money, with their blood and sweat, with their savings, their pension, right? The companies we work for whatever, are NGOs. These people rely on us to show up every day so that we can generate funds for their projects because they're helping people. My partner, she handpicks NGOs and we help them raise funds. NGOs are always out of money, but they're running orphanages, they're taking care of people, or building schools. People are relying on a good trader who's moral but knows what he's doing to raise funds. So I have a target here. I'm only risking 1,250. I have an 8% target, which means I only want to make at least $2,000 to know that I'm good, because that will mean my 25,000 becomes 27. That's good progress. So if I get all 20 trades right, and all I did, you need to listen to me carefully, I risked $63 to only make 189, and I did that 20 times. Rinse and repeat. I make 3,780. Right? You get an A flying star from me. But let's say life happens and something goes wrong. Let's say you have an 80% win rate. What's an 80% win? It means you won 16 trades, but you lost 4 because out of 20. Now check this out. Because you won 16 trades, that's 189 minimum times 16. That's still $3,000. You lost 4 in your cluster, but you still hit your mark. You literally still generated more than 8%. 8% is $2,000 on the account. And you lost 4 trades. That's $63 times 4, which is 252. We're going to talk about the correct lot sizing and how you get to that risk amount. They're very important. I don't even want to rush this video. I want to tell you guys, I am so happy I am not doing this live. I can already tell in my mind, I was starting to chase time. I don't want to chase time today. I want to chase education. I want it to be quality. And those of you who are going to complain how long the video is, I am sorry, there's nothing I can do. Maybe only short videos and microwave baked education isn't working. So just sit through this, take a break, pause the video, make coffee, come back. But I think we'll do like an hour, 30 minutes, right? And our war rooms are normally 2 hours, but I just don't want to rush through this stuff. It's very important you understand, especially you who's not in the academy, because you won't have me on speed dial. All you will have is this video. 365 students, we're doing the module 3, module 4, so we're building into all of this, right? So you will have me running this for you every single day. Remember, I will be the one updating the spreadsheet for us. I cannot allow everyone to edit it on the remote course. Otherwise, you know, the formulas, blah, blah, blah. So it will be my job to keep this entire spreadsheet up to date week by week. You are literally getting my full playbook this year. Right, full playbook this year. Right, so you lost 4 trades, but because you were risking smart, risking what only you can lose, not your entire capital, you burned through $252 while still making $3,000. But let's talk about a 70% win rate. Supply and demand should offer you 80% minimum. The one that I teach. The one that I teach should offer you minimum of 80%. But let's say something goes wrong with the psychology, with the trade. Let's say the trades are all trash and you get 70%. Well, that means you won 14 trades out of 20, you lost 7. 189 times 14 is still 2,600. You're still a profitable trader. Man, you lost 7 trades, you still hit your target. I love Forex for that. I love the markets for that. Right? You're allowed to make as many as some big room for mistakes and still become consistently profitable. Doesn't even matter the trading style. I just prefer supply and demand because it offers the most accurate way of doing things. But check this out. At $63 you lost 7, so now you lost 441, but you bagged 2646. So this is all profits. So you meet your targets. At 60%, you as a win rate, it means you won 12 trades, lost 8. 189 times 12 is 2,268. You still made the target for cluster 1, and there you go. 63 times 8, the number of trades you lost is 544. So I have here in the first anywhere between 60 to 100% win rate will meet your target. I now know this is a trader. I need to know this before I start trading in case my psychology trips me up. If the first trade I make in the cluster is a loss, I need to remind myself, I'm not going after 100% win rate. I'm going after an 8% growth in the account. What's your target for this year? Because you are not obsessed about being perfect in the markets. That's not the right approach. The point is, what's my objective target? Is it realistic? If it is, what do I need to get? I need a 60% pass in this cluster just to make $2,000, which means there is up to 8 trades I can get wrong. I can make 8 mistakes and still make my target. But here's something better. Let's say you're a 50%. Got a 50% win rate, which means you win 10 trades and you lose 10 trades. Look at how close you came to your target. Fine, you didn't make the $2,000, you didn't make the 8%, but you still made money. You still made 1,890, which is going towards your capital, and you're still losing far less than you're winning. So what's happening? Your account is growing. Please. Just pause this video right now and let me know. Literally, I will literally want to read this if it's clear. Right? So I'm doing a pre-recorded temperature check. If you've been to my live classes, you know I love to do a good temperature check. This is to check if you understand. If you have questions, type them now. Don't say you're going to ask me later. You're going to forget. And what you're going to forget is going to bite you in the markets. I need to know what together. So this is it. So this is the plan for this account. You need a plan. You're going to put in your capital. Save up some real money for your capital. Try. Things are tough. Things are bad. My course is as cheap as possible so that you can be saving on capital to make money. All of you will buy me crypto one day to thank me. But right now, course is very low just so you can work on capital. You need real capital to trade, right? Try to start at $500. $400, right? It's a $100 game of yours. If you don't have the willpower to wait it out, can be a very suffocating journey because you'll start to make mistakes to rush the process, right? So whatever your capital is, this is it. This is the blueprint plan, right? You're going to have some on the remote course or on YouTube to have a look at it. Account number 2 is different. You see, because this is a lot of money here. 25K is actually quite a lot of money. It's a significant upload into the account because I clean out my account at the end of every year, and then we buy property, buy crypto. This year to buy more property, and then this year capital is going to go to crypto again. But yeah, 25K in rands is quite a lot of money. It's just under 400K. Right, so this is the plan. I want to risk as little as possible and make as much as possible. Account number 2, which is slightly more doable, right? It's about 90,000 rands, something like that, if I'm not mistaken, which is about 6,000 US dollars. Right, I have already predetermined that what can be lost. What did I write in notes? 1% of 6,000 US dollars is 60 US dollars is 1%. This is the second trade. So you only need one of these. You only need one cluster if you have one account. I have 9 trading accounts, right? I'm showing 2 publicly on YouTube so that you have that step-by-step direction throughout the whole year. But whatever it is, you don't need to start a second account. Those of you who last year I said if you wanna get the positional trades done, then you should have 2 accounts by now. I announced this in November. I'm just going. I speak this year I just speak, record, and I say, Father God, I've done my part. My part is to show up, right? But if you just have one account, that's also fine. You only need one of these. You don't need another one. This is for me because I have to do this on 2 separate accounts because there will be expedient growth the bigger the capital. And here, even though it's 90,000 rands or 66,000 US dollars, I want you to see how very careful I am. I'm extremely painfully careful. Right, so 1% of, where was I? 1% of 6,000 US dollars is 660 US dollars. So what can, something is wrong here. I think I just copied and pasted from up here. It definitely isn't 250. So if you just quickly edit, I'm glad I'm doing this video with you so I can catch these mistakes. What can be lost on the account is not going to be 250 US dollars. Because remember, in the above account, what could be lost was 1,250. What can be lost here, I can tell you right now, is about 700 or something close to that. Am I tripping? Oh, no. This is correct. This is absolutely correct. What can be lost, the maximum, my maximum pay, maximum, maybe it's how I wrote it down. Maximum of what can be lost on the account is 250 US dollars. I agree with that. Sorry, I'm tripping here. Right. So the maximum of what can be lost is 250 US dollars. The target for the account is going to be 12%. Right, so 12%, let me just double check myself because I did do this in the middle of the night. 12% of 6,000 US dollars, I am absolutely correct, 720 US dollars. I hope you guys can see that. Right, so this everything is fine. So the target is 12%. I want to see 12% growth after a cluster or 2 clusters, but that's my first target. My first target on a 6,000 US dollar account is not 12,000. I'm not going to just try and double it without checking. That is the big picture target, turning 6 to 12 sharp. But I'm not going to just do it overnight without having clusters in place. I'm going to have cluster 1 make me 720, cluster 2 make me 820, cluster 3 make me 3,000. And as the account grows, that's how you get to 12,000 US. That's how you 2x, right? That's the journey. In season 1, I noticed what I did was I just recorded myself making money. It's on our YouTube channel. I'll show it to you at some point, right? So there was season 1 of how to trade. I wasn't teaching. I was just going to watch me take trades. This year, season 2, I want it to be very clear how, why, so you can duplicate it. The book we're doing right now in the reading club, in the Money Heist podcast, is The Science of Getting Rich. And what I like about it is he actually gives you a blueprint so you can duplicate. That's what a good teacher should do. So that's what I'm doing. A blueprint on how to 2x, 4x. You don't just jump. You have to have a process like this. So the maximum I want to lose in 6,000 US dollars before I go, oh my God, something is wrong, change the strategy, give up on life, is 250 US dollars. That's how strict I am. Yes, I have a lot of capital still to play with, but 250 US dollars is the maximum that I'm willing to lose. And so for that, my target, because remember, my maximum is going to, my maximum loss, what I'm willing to lose, will influence my lot size. Because remember, we don't trade the capital, we trade the maximum of what we can lose. So technically speaking, my capital is 250. Even though I've got 6,000, I want to grow 250 off 6,000 to 720. Right. So the target for the account is 12% of 6,000, which is 720 US dollars. So on a risk 250 and flip it to 720, that's almost 3x. very close to 3xing what I'm willing to lose, which is beautiful. So that means 250 US dollars, which is the maximum I'm willing to lose, divided by 20 trades equals to $12.50 risk per trade. And as usual, I got to focus on my 3:1. For every dollar I risk, I should extract $3 back from the markets. So that's going to be risking $12.50 per trade to make $37.50 on each trade. Now, let's look at the difference, because every time you change the capital, it's going to differ. You saw here, for me to meet this, I could literally be a 60% winner, 40% loser, and still meet the expected target of 2,000 US dollars. But because now I've reduced my capital size on account 2 and reduced how much I'm willing to lose, which is 250 US dollars, I literally have to be okay with maybe trading 2 clusters instead of 1 to make 720 in case something goes wrong here. Because the reality is, if you're 100% a winner on this particular cluster, which means you win all 20 trades, right? And you must remember, winning all 20 trades where the minimum is $37.50 that you can get, or that you're targeting, 1:3. That means $37 times 20 is 750 US dollars, which means that target of 12% is now met. However, it gets tricky now at a 90%, 80%, 70%, 60%, 50% winner. None of these in round 1 of cluster 1 will allow you to get close to 720. The moment you become a 90% trader here, which means 18 trades won, 2 trades lost, you're going to take home 675 US dollars, but also lose $25. So you're not going to meet the 12% target, and that's okay. The point is, in cluster 1, you still made 675 US dollars. So when you're in cluster 2, your first 3 trades might then push you to meeting the 12% target. Maybe you're going to need 3 more clusters. It doesn't matter. What matters is protect capital, grow the damn account. Protect capital, grow the account. Protect capital, grow the account. Right. So we can do the math like we did earlier on. 80% means winning 16 trades, losing 4. 37 times 16 is $600. You've lost $50 overall. Let's get down to the very last one. Let's say you're a 50% loser, 50% winner, and it can go down. It can be 40%, 20%. Generally speaking, I expect as every single registered 365 trader to not have a win rate below 50% and to be moving towards that 80% win rate. That's my expectation. Just follow the rules. Right? Don't twiddle with time frames you're not used to. Just do a clean MTA like I taught you. Just be patient like I asked you to be. Follow your governor, etc. I don't even talk about below 50% win rate. If that's a problem, you need to talk to me and let me know. A couple of you have asked for one-on-ones. I'm not saying those of you ask one-on-ones is the problem. I'm just saying I'm aware of that, and I did say those will start in the last week of Jan this year. Right, so let's say you go down to 50%, which is really the scenario, which is your worst case scenario, right? 50% means you won 10 trades, you lost 10 trades. Well, $37.50, which is the minimum or a target of 1:3, right, of profits, would give you 375 US dollars. So you start off with 6,000 and you've already made 375. That's a win in my books. Yes, you didn't get the 720, but your account is growing. And you lost $12.50 times 10, which is only 125. So this system lets you know that no matter how bad things get, even in the worst case scenario, your capital is always protected and you're still making some type of profit. So a heavier worst case scenario, you lose. In the absolute worst case scenario, if you lose all 20 trades, 6,000 doesn't go flying out the window. Only 250 US dollars goes flying out the window. Then there will be many things in the spreadsheet where we can now discuss why, what happened, how do we fix it, right? But this is fundamentally powerful. If you're a 50-50, you win or lose, you lose 50, you win, you lose 10, you win 10, etc. All you're going to lose is 125, but the 10 you're going to win gives you 375 US dollars, right? So that's the first part of the spreadsheet. Sorry, I just want to remove this. And I call that the trading plan. This is the trading plan. This is where you understand what your clusters need to look like. All you should do moving forward is to trade in these clusters. You set up 20 trades, you follow this. There's going to be a question later on about Leroy. Well, how do I know? How did I get how do I know what lot size to use so that I'm risking $63 per trade or $12.50 per trade? Let's move to the next tab, the pending order list. You already know the plan, right? You're trading in clusters of 20. Now, you come to war rooms, do your own analysis, you do this, you do that, you do this, you do that, you do that, all that beautiful stuff, right? And at the end of the day, what happens is you're going to generate trade ideas. You're going to have a lot of pending orders. I'm going to put every single war room trade that I give you guys publicly in here. This is our, you can see I started working on the spreadsheet in November because I can see one trade. Oh, it's the AUD JPY trade, right? Do you remember this? Sell. It's public. We did it. Killed it. All right, so there's going to be a pending order list. I mean, I do this manually too, guys. I've got notebooks manually, but spreadsheets are so much better because you have it all in one place, right? And we're going to have it on remote course. So even if my laptops were to all catch fire in my trading box, whatever, we'll still have a backup somewhere there. Now, the point here is everything that you think should be a pending order, every single trade idea, you put it here. Don't rush to load up your MT5 with 30 pending orders when you're someone with only $200 capital. What would you do? What would you do if something was to happen to the markets and the markets go very crazy, very quick, and all of a sudden there's an influx of volatility, and out of 100 of all the pending orders you have on your MT5 platform, they all get triggered? You are going to have a margin call problem. That's number one. Number two, you're not going to have enough capital to hold any of those trades. So guess what? Even if you might have been right about the analysis, you're still going to lose your money. So have your pending order list here, and then use this to start to rotate around your small capital as you grow it on the system. So you can see I've got nothing left because I made a deposit for this account on Thursday or Friday, etc. So we're waiting to build. That's going to be from today's war rooms moving forward, right? But let's look at an example of what actually happened. So last year in November, we gave out the several. So unfortunately, most of those other trades were taken in my other account, but I did start the 25K one here where there were several trades that went off, and AUD JPY was one of them. So I've just got the pair. I'll make a follow-up on whether this has happened or not. Well, I don't think so. I don't think this has been triggered. Right. So there was AUD JPY 18 November, right, when the pending order was set, all right, on your trading platform, right? So this is not when it was set on the spreadsheet. When it goes off on the trading platform, buy or sell to sell, entry point, stop loss at 365. We always know beforehand where we're entering, how much we're going to lose if we lose, where we're putting our stop loss, and where we are exiting before we take the trade. This is key. I don't ever look at the markets ever and see a move happening right now and go, oh my goodness, that move is going to make me a lot of money right now. Let me take the trade. I used to do that. I lost more money doing that. I have empirical data, spreadsheets upon spreadsheets, that market execution does not work for me. Because it doesn't work for me, and I respect money, because if I respect money, money respects me. I don't do it. I see a move happening right now. If it's not in my trading plan, good job, whoever is in there already, because whatever you're seeing happening right now was planned by someone else 3 days ago, a month ago. Swing to position. We understand smart money plans months in advance. So I don't just jump into someone's trade. I don't just jump into the markets moving up or down when I don't know the destination. This is done before you get hit in the markets. All of this, 1, 2, 3, 4, 5, 6, 7, 8. This whole 8 cells are filled in before you go to your live account. So I know the entry point, my stop loss, my target, and my
What I want to risk. Remember, here on our trading class, what's the rule? That means 1,250 trades divided by 20 trades equals $63 per trade that I'm risking. So in my pending order list, I have to follow. You see here, I broke the rules, but this is not being pending, right? And I'm like, you know, I try and balance it out. You see, here I did less than 63, $2 less. Here I went over by almost $3 just to balance out the portfolio. What you don't want is a situation where instead of 66 here, you're risking $100, right? Because what you need, good leverage, good risk management to make money. And then instead of, so what I did was I knew I was risking $61, right? 44 cents there. For AUD, one of the entries. There were like many entries that we took, but for this exercise, because I started building this thing for you guys last year, I was going to show you this one, right? And I knew that that is a nice 1:4, because when we got our profit target where I placed my TP, I risked $61 and I made $235 from that trade. And then I wrote, it's a win. You have to make sure you know whether it's a win or loss. And the notes was, I took one of the following AUD JPY trades was definitely on the 1 hour time frame. So I made a note of that, because at some point in time, I need to start to see the correlation. Do I see better on H4 daily or H1? I need to build data. I need to keep trading to see that kind of stuff. This is your building platform where your pending orders will come in, right? So you can design this yourself. You can have a look. There will always be one on the remote course for 365 students to keep track of our war room trades, but you can have one for yourself at home there. It's just this basically a trading journal, you know, in some form of way, but it's deeper than that, right? Now on the trading journal, I see I have mine here. And this one is linked to the $25,000 account once again here, right? So I've got this. So first of all, I plan the cluster, and then I put down my pending order, and then I come now to the actual journal. In my journal, I've got the same pot down. I've calculated everything. Remember, I said 1%. Let's go back to it. You guys, this is not a game, bro. 1% of $25 is $250. I'm like, no, I don't want to risk 1%. I want to risk the maximum, which is 1,250. I want to use that as my capital and then risk 5% of my maximum. It turns out 5% of my maximum of 1.25, which we now know as $63, is actually 0.25% of my entire trading capital. So now I know as a trader, I risk less than 1% on every single trade. And when I grow this into something incredible by the end of the year, I will know what it took. Yes, it will change. When the account gets to 30,000, 40,000, I can then start to adjust. But as a starting point, on a matter of principle, on a matter of talking the truth, I still fundamentally take pride in risking far less to make a whole lot more. So this is all automated. The formulas, the reason why I don't want people fit in with the spreadsheets, because you guys always mess up the formulas. So maybe I need to teach you how to do that stuff, right? So it's 63 pounds or dollars, whatever it is there, etc. Now here it is, 23. So the pending order was put in on the 18th of November. Now here I am now in my trading journal on the 23rd now of November. It happened. Trade lasted for 3 or 4 or 5 days. It's a short-term swing. I made money. Entry time, can you guys see that clearly? Let me just make this a little bit big. A little bit big. It's 4:15. I hope no one is wondering what time I'm going live. I don't think I clearly communicated that today's war room will not be live, but it's happening. I am recording as we speak. Maybe at 4:30, just drop a message in the Telegram group just to let them know that it's coming. Anyways, 23rd November, AUD JPY, my entry point. Right, so the rules of the journal, guys, is you can't put commas in these cells. Otherwise, it's going to mess up my formulas, right? So that's why you guys sometimes have struggles with the trading journal. But I put notes above there. It says the values in the columns should be in pips or points rather currencies. I wrote this for you guys. Maybe let me make this red. Maybe people can't see it.
Because I sent this to students and I did see some people wondering what's going on. Right, so maybe you can see it better now. Ah, man, now the laptop is thinking. Okay, now it's clear as day now. I'm hoping people see it. Right, so remember my entry point on my penny on the list was 83,468, blah, blah, blah. See that comma there? In the journal, I can't do that. So maybe there's an adjusted entry there. I just write it as a value, 83225, no commas. My profit target, my stop loss. The trading journal, guys, what goes in here is what actually happened. This is a plan. This is the pending order. So clearly I adjusted my entry point a little bit. For whatever was going on at that time in my life, I write down literally what actually happened, what my broker is going to print in my statement. That's what I put in here. My profit target, my stop loss, my exit. So I got triggered on the 23rd. I planned the trade on the 18th. I got triggered on the 23rd. My take profit happened 3 days later. Like I said, it's a short-term swing. It seems like I got TP got hit at 8 a.m. just before the London session. I remember that very clearly. There's the closing price. It was a short sale, and there it is. 0.15 was the lot size. So let's talk about that quickly. Capital risk. It will automate. So now this is no longer just your $63. It's about, it'll add in, because of the formula, right? It will add in the spread. It will add in a whole lot of things, your swap fees for holding a trade overnight, etc. So this is capital risk at the end of the day, your capital reward at the end of the day, your profit or loss, right, which is like 269, right, slightly higher here, because like I said, this will calculate everything, right? And then your actual in-house profits, your loss, and then it'll start to create everything in the green cells, guys, as a formula. So it'll start to create a portfolio. It's tracking your, this is your first trading psychologist. It will tell you, like, look, man, this is your cumulative profit or loss. If it's a loss, there'll be a negative sign next to it. And all these fields will automatically fill themselves. And as soon as you do your job, which is to put in all the data in the yellow, the green, you don't type anything in the green. It automatically happens for yourself, for itself. It's just a good formula. If you had lost it, it would have known you lost the trade if, say, the closing price was the opposite direction. So instead of selling, it bought, and you wrote down, well, this is where price closed, or it closed on your stop loss. The formula would tell the spreadsheet immediately that this is actually not a win, it's a loss, right? So it would be number of winners 1, number of losers 0. So far on my trading journal, I have 100% win rate. So I don't have a current drawdown. We can't even talk about an expectancy rate right now because it's just one trade in here. The yellow, it's all for you. You can come back and say, why did you adjust? Well, because I saw Leroy's trade, didn't make sense, so I made small adjustments, my entry, blah, 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 comments, you know, everything was a good day, blah, blah, blah. This is what a good trading journal should look like. So I have one here that you guys are going to see for the 25K account. I've duplicated a same version here. I'm going to just fix that quickly and put in $6,000 US for this trade. Yes, the second trade. All right, so that's 1, 2, 3, done. Woo. Now, for what the video is really about, and I hope you guys understand that, you know, I've really taken time to build this thing for you. This is absolutely, there's been a lot of work. There's been weeks and weeks and weeks and weeks. And then I thought, do they deserve it? Nah, why is it for free? And I just kept pushing because this stuff for me is now in my head. And what I like about doing stuff with students is it forces me to put in a process, right? So that nothing waits for Leroy, which is what I love. I mean, I'm not those mentors who want to be a small god in your life where you only breathe when I say breathe. No. My point is to empower you so that you can do it. If I get bored with teaching, if I get bored with this stuff, I go back to what I used to do, trade in silence and make money for me and my family. Full stop. And I'm saying that's not what's going to happen. My point is I just want to make sure you're fully equipped to do this by yourself. Right, so check this out. Time, and I'm out of stuff to drink. So I'm going to teach you the first phase of reading COT data, because you're going to have the spreadsheet on the remote course. This is the main meat of the video, of this particular video. I'm going to teach you the stuff today, and this is part 1. You guys asked me, Mama Eunice, it's coming now. This is all part of module 3. Intraday traders, day traders, you need to know this stuff. You need to know which lion you're going to face this coming week when markets open, right? So it starts off with the COT, tracking smart money. I'm going to teach you how I work it out. I'm going to teach you how I read it. In this video, I'm going to introduce it. I'm going to explain what stuff is. And those of you who are inside the academy, module 3 is already free for you. If you're already registered, my promise remains, you are not paying for module 3, because I promised it last year. If you just joined us in December, you didn't even know this, absolutely. There are some students who have already paved the way for you. Module 3 is a free gift. It's intraday trading, and I'm going to walk you through. Those of you who don't know how I operate, first, before I teach, I write down the entire manual. So this manual is done, and the videos and the recordings I've been doing are going to be from this manual. I had to, however, back test my module 3. I normally like to take at least a maximum of 1,000 trades. And for someone like me who is rule-based, that takes forever. 1,000 trades to a beginner. Every day they're opening and closing. With me, no. With me, I need to know that this is going to work. So I was averaging out roughly anywhere between 10 to 20 trades per week sometimes, but sometimes nowhere close to that, right? So I'm very close to completing that, and I'm finally happy because after 1,000 trades, I have to determine what the win rate is for the thing I'm about to teach. Is it in line with 365? Is it still 80% win rate? And I'm happy that it is, right? So this COT holistic data, and maybe, sorry, in case you're confused, those of you, I don't want to forget this. How do you get the slot size 0.15 to match how much you're supposed to risk? You're supposed to risk only $63 US, right? That's something I really want to make sure we're all clear about. You don't just guess the lot size, because remember, the lot size you're going to use absolutely needs to match what you are allowed to risk according to the cluster you're trading, right? So you could do it the painful manual way, calculate pips and divide and all that nonsense. But yeah, if you're on the YouTube channel, I'm going to leave this link for you in the description below. Please check out our description. There are going to be a lot of important links in there after this video. The remote course, the discount, and this kind of stuff, right? So maybe real quick, this is season 1 of how to 5x 10x your trading account. This is the 365 YouTube channel, and these are all the playlists in the channel. So we've got the podcast, Money Heist podcast. It's really an important thing to just take part of every single day. All things crypto, Traders War Room. This video is going to go into the Traders War Room platform. Traders Rehab, I'm doing a lot of whiteboard videos. So a lot of the videos are going to go into Traders Rehab, fixing your mindset, etc., etc. Snippet from our classes. If I do feel like there's something I said important in a class, I'll cut that small part out, and just to showcase what our live classes are like. Synthetic indices, me and my little brother are going to come back to that. And then season 1 of how to 5x your trading account, where I showcase my live accounts and how I'm growing them, etc., etc. Right, so this is the 365 YouTube channel that you're watching the stuff on. So if you are here, please do subscribe. Right, so this link I'm going to put in the description, right? Just click on it. It is the easiest pip calculator. It is the easiest pip calculator. So let's go to AUDJPY, which was that example that I had that we did already together, right? AUDJPY. And let's say I already know, according to my cluster, all I can risk is $63 US, right? According to my cluster, all I can risk is $63 US. And so I need to know exactly how much that's going to be, right? So what are we doing here? Is this a pip calculator? Yes, it is. Right, so by the way, there's lots of stuff in here. I normally use the pip calculator and the point position risk calculator when I'm calculating things like NASDAQ and whatever. But you see here, I came here to position size and risk calculator. I haven't done this in a long time. So let's say there's your account balance. So let's say my account balance was 25,000 US dollars. But if you type that, it's going to calculate it based on that. So what you want to do is to say, actually, my account balance is what I'm willing to risk. I want to risk my maximum paid, remember, of 1.5. And then let's go with the 5% and see what happens.
stop loss in pips. Well, you should kind of know this stuff, guys. Look, it's so difficult now because I mean I have to pull up charts and recalculate this stuff, but you just use that your stop loss, right? So you'd come here. So let's find AUD/JPY. It's just that I can feel me trying to rush over it because I feel like it's not important, but I know it is. I know it is. I know it is. So this was the AUD/JPY trade that we took together right there. See that there? I said sell there, but remember we had sold many times up here. So this was a beautiful trade. Guys, I don't even lie, a beautiful trade. And then price broke through and then broke out, and it's coming back down, right? Because the fact that it did this, we know it's going to sink some more, but I'm not in the trade right now. So let's focus on this particular trade, because remember the trade that we looked at happened on the 20 something to the 20 something. I don't remember what now. Somewhere here on the, according to the trading journal, I'll quickly go back there. Where's my trade? There we go. So 23 to 26, right? 23 to the 26. So somewhere in here, I remember this like it was yesterday, right? So somewhere in here and then up until down there, right? So now, if man, let's use this clearer. If you've done the course, then this is not going to be a problem. But let's say you haven't done the course, then I don't know how you're trading, man. I don't know what your trade is type, support and resistance, etc., etc. But I'm telling you how to feed the right information to this thing. It needs to know what your stop loss placement is going to be like. Now, as a 365 trader, I can tell you how I've taught my students and how I trade. Fundamentally, I find a supply. Do we have a supply here? Yes, we do. Then we create a zone, a trading zone. If when you create the trading zone, we calculate how big the zone is. I use an information line for that. It's easier, it's quickly, it's simple. And then I just calculate, okay, so this particular zone is anywhere about 19 pips, give or take. Why? Because my stop loss as a 365 trader is always going to be just above a zone. It's never going to be inside the area of value. And my entry point as a 365 trader is always going to be at the area of competition or just below the zone. So let's do it like this. Let's make it this big. So it's 21 pips. This area of value is 21 pips. So I now know that my stop loss in pips is 21. All right. And AUD/JPY, your balance currency is in dollars, your account balance is that, and I want to risk 5%, right? Something like that. So it's telling you that, look, man, you could add per trade, you're literally risking $62.50. Remember, you only want to risk 63, right? And it's telling you that if that's the case, double check with your broker, but you could go as far as 0.34 lot size. Now, I want you to know, I cannot explain why or how it works, but some of these online calculators are deceitfully dangerous. So as soon as you put a trade with this big lot size or small lot size, whatever your perception is, make sure you check. You know how on MT4, when you put a trade, let me open an MT4 platform. When you put a trade on MT4, right, to go COT. Right, and remember, it's pending orders, so you have enough time to double check. Don't ever tell me you made a market execution, used the wrong lot size, and now you're risking more than you can handle. It's absolute nonsense. You are planning trades in advance using pending orders, so there is ample time. There is ample time to double check what you're doing. I'm just trying to gear up one of my live accounts to open so that we can see. I just want to show you where it will be. So as soon as you put the pending order on the platform, it'll go cool. And that weird sound, you can then track it, right? So you can go, so there it is there. Oh, wait, let me not say there it is, and maybe you can't. You got what? It's not even live. I was about to ask, can you guys see my screen? Right, let me just reshare. Right, so this is one of the, so there it is there. This is me, EL, is my partner, anything that says PM on any of these real accounts means fund managing accounts. But I'll show you some of them with time. Right. Anyway, so this is where we are. Look, so there's 6,000 US dollars. So let's say I was to put a trade right now. Is there, okay, there's no pending order on this one because this is the one I just, like I said, I funded this on Thursday, Friday. And it'll go cool. A line is going to show up like this, a red line, and it's going to have your stop loss. All you have to do is hover around that line like that. See there it says daily horizontal line. On your stop loss, it will literally tell you minus $62, or it will say minus $100. It will tell you exactly how much you're risking. So if I've got a level here, I was watching this area for a buy. right? And I put my stop loss there because I think price is going to come touch here and then go up. And it kind of did, but I didn't take the trade. In fact, my price chose this demand, but broke it for a lower demand. Interesting, right? Point is, you have your cursor on your stop loss because you're following this step by step. You already planned the trade ahead. It's not a market execution trade. It's a pending trade. It's a pending order trade because you've got a pending order list. And so you can go back to correct. So you check to see that you've not been scammed by Google. Google is saying, look, man, you can risk $62 per trade, which is 5% of this, which is exactly what we want in that cluster for Leroy's account. And he's saying to get this out of that, you feel comfortable to use 0.3 for etc. Right? That's the particular lot size. And that's it. And you use that in your first pending order and you double check to see that you definitely use 0.345. So you entered here like that, and there's 0.345 operation, there's stop loss here, you weigh, you check it out, you see it for yourself that this is definitely going to be worth $62, that the broker is going to take away $62 for you if you are particularly in the middle. Actually, do you know what would be cool is to record me recording and then put that on the public Telegram for those people who are waiting for the live. Let me just quickly do this. I'm so sorry, guys, but it's just very important that people know that I'm not breaking my promise, that I am coming back. So I'm just going to quickly record 365, guys. I am literally in the middle of recording your war room, right? So it's not going to be live, but I'm literally in the middle of recording your war room. So please expect it in the next hour or two. I already started recording. It won't be live, but it's happening. 365, right? Cool. Thank you for your patience. Right. So make sure. But that's how I quickly calculate my pips. I come here because, and it will tell you, right? It will tell you, look, man, this is your lot size, 0.34, blah, blah, blah. So that's how you get that amount, right? So I just wanted to make that clear before we move on to COT stuff. Before we move on to COT stuff, I wanted to make sure that it's crystal clear. Right. So now let's talk about COT, the reason we are here, which is essentially still part of the spreadsheet. It's literally part of the spreadsheet. It's literally part of the spreadsheet. Right. So I took a quick break. COT. Wow. Look, I've been trading supply and demand. I mean, I started re-looking into this and reusing the old data and compiling it, you know, in this methodological way I'm going to show you recently because students kept asking about it. But honestly speaking, I just trade charts. I look at the charts. I'm happy to understand what the banks and large institutions are doing from the charts. But if you guys want a bigger narrative behind the order flows and all that kind of stuff, then obviously COT is your place to go. I have two sources for COT. I'm going to show them to you right now. I'm also going to then add the links to these two sources for COT in the description down below. Should probably make notes as I go what I need to put in the description. If you can excuse me, it's just the pips link and COT link. All right, ×2. So all those things will be in the description down below. Right. So this is the first one, MyfxbooK. So if you just go to myfxbook.com, you know, it should look something like this. You can sign in. You don't have to sign in if you want to sign in. Technically even better because then that annoying thing won't keep popping up. It's completely for free. All right. And then you come to market. You go to COT data here. And I've done this before in one of the forums, but I'm doing it properly now. Right. If you want to look at these things individually, you can. I find that quite time consuming. So all I do is click on view historical data, commitments of trades data. Just a heads up, the banks will communicate and let everybody in the institutional sector at an institutional level what they're doing on Tuesdays. So they have to submit all their orders on Tuesdays. It then becomes public knowledge to us on Friday. So they have a head start to move in the markets, number one. Number two, technically speaking, what you're reading for Tuesday, which you'll get on Friday, is always COT for the previous week. So you're always kind of like running behind, almost like 1 full week behind them. Okay. Last year, about 3 or 4 times,
they delayed releasing data on purpose. Literally during the FOMC's ups and downs and all that kind of stuff, you're like, whoa, what are we doing? Let's wait. And technically speaking, it took about 2 weeks for one of the reports to come out, right? So if you start to rely on this thing, solely on this thing, you won't know what to do on times like that because they are trying to reposition themselves, okay? Why it doesn't bother me that it comes out a week late and why it should not bother you is because banks and non-conventional positions and commercial positions, generally speaking, these guys build their position. So if they're buying this week, it's not like they're going to all of a sudden change their mind on Friday and then there's going to be a sharp sale on Monday. There will be a sharp sale on Monday on the smaller time frames, but the overall direction of a buy might still be intact. That's number one. You have to learn to think in a multiple time frame analysis framework. They are selling today, but are they've been buying for the last 3 months and are they going to continue to buy for the next 3 months? Absolutely. Which data is speaking to you? The intraday data to sell today or the swing data to keep buying by the dip? They're creating a dip by the dip, or it's a sale today, it's a buy today, but it's just a retracement for a long-term continuous downside for the next 2 to 3 weeks. You have to be able to extract that information out of the data. The best way to do that is from module 1 and module 2. There is no substitute for that kind of stuff. There's no substitute for correctly reading your multiple time frame analysis correctly, your governing supply, your governing demand, your mayoral time frame, your daily time frame, your 8-4 time frame. There is no substitute for the golden thread. There's no substitute for being able to correctly predict where money is going ahead of time. This fills in the blanks. It is not a substitute. Module 3, I delayed it for so many reasons. So number one, I didn't think there was a need for it. But number two, because you guys asked me so nicely, I made it. I delayed it also because I don't want people to get confused. Your module 1 and your module 2 are your basis foundation. They are enough. Your main, you guys will be the first group of 365 traders to use module 3. There are already 108 senior traders who've done module 1 and module 2, some only module 1, and made it in the markets, right? So you don't treat this as the holy grail, right? This is just supplementary information. Anyways, you can see this is all the historical files. So you just click here. Here's the latest one, 11 January. If we click on our, wait, am I sharing the right screen? I mean, I haven't taught anyone or done these videos in like almost 6 weeks. I can tell my stamina, man. I'm like, wow, tired of talking. Right. So you click there and it will write the community's report, generate da. Right. I like to just automatically download the CSV weekly and then immediately put it into a master spreadsheet, the one we're going to be working from today. But when you download it, it will look like this. There'll be the name of the asset, open interest. I immediately delete this open interest column. I don't care for it, but it's just basically everything that's on the table, on the dealer's table, right? Commercial positions, which is us. These are hedge funds, banks, institutions, 365 students, because we trade alongside these people. Commercial positions are corporate hedges, and we're going to talk into that and why they're also important. And then all of this stuff, non-reportable, it's nice to know, nice to see, it doesn't matter. Non-reportable, like who are these people, right? Retailers, blah, 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 dealers, positions, brokers, asset positions, blah, blah, blah. All of this stuff from here, man, from all the way there to the right, I just remove that from my spreadsheet. I don't need that information. Now, MyfxbooK will only give you these assets here. AUD, CAD, Swiss franc, euro, pound, JPY, peso, Mexican peso, the Kiwi dollar, NZD, and the Russian ruble. That's all. That's all. I mean, unless I stand to be corrected, I'm sure. But for me, this is always where I come to get my currencies. If I want to come here, there is a second link, which is this one, right? Which again, I'll post the link down below in your in the description, and you can see here it's got everything. It's got all the currencies, it's got the bitcoins, it's got, if you're like a big lover of avid trade like I am, where you trade, I hedge my own account with all these weird stuff, corn, where my longest hold in 2020 was cotton, etc. So it's got indexes, Nasdaq, Dow Jones, livestock, gold, silver, futures, markets, etc. So it's got more. It's got more. So I use both. I use this because it's so much easier. It's accessible. It's just one click and you have the full CSV file, right? Click there, Click here, boom, got the whole file. Here on this link, unfortunately, you have to go line by line, right? So you go to COT legacy, it will just show you for that, for the Japanese yen. If you take week 1 individually, then click here, then find the following week you're looking for, and it will show you for what it was on the 4th of Jan, and you take that. So that takes forever when you're compiling the spreadsheet, and it really took a long time for things like Nasdaq, gold, all those things that are not there. But it tells you the exact same data. No website will publish something completely different, right? So that's, first of all, our source of information. All right, cool. Now let's get into what this information is telling us. Let me quickly show so in front of you here, I've pulled out, let's start with the currencies, right? I've pulled out everything, like I said, AUD, CAD, Swiss franc, that MyfxbooK would give you. All right, so there are still other currency pairs like the dollar. We love the DXY in the academy. It's not there, right? So we need to talk about that. I hardly ever, if never, trade the Russian ruble. I haven't taken a trade on any RUB thing ever. In fact, deleting this thing would do me more good than harm. All right, but it is what it is, right? And so the COP data is here to help us understand where exactly are the banks and the institutions creating supply and demand zones, number one, because we know we're not here to debate about trading strategies. Supply and demand is a superior trading strategy, facts on facts, because it aligns itself with smart money, full stop. Now, if you understand the futures market, which is what all that data was, right? So if you see there, let me show you, because they'll be like, what is he talking about? What's he saying now, right? Is he making these words up? So if you come to that second link, which I think is more interactive and it's got more things, it literally tells you COT futures, COT legacy futures. So everything here, if you click on any currency, let's go to the dollar, my favorite. Right, it'll tell you that COT report dollar index IC futures, future positions as of the 11th of January 2022. Right, so that's why I'm saying you must understand what this term futures means, because all these are futures reports. Traders, institutions love getting future contracts on particular assets. Now, it doesn't matter to us very much, because a futures contract on a currency asset is generally when an institution bets in the same direction as the actual currency pair. Only they're just betting on where it's going to be in the future. Hence, it's called market speculation. I'm speculating that Bitcoin will do 100K by April. It's a speculation about the future. So that's what the futures market does. And because there's a futures contract, and one day I'll explain how they make money off that, how you can get into options trading. D from Kenya, I saw you in the private group asking if anyone does option trading in the academy. In that group, you asked that question, the education group. I don't think anyone in the education group does option trading. I do a bit of option trading every now and again. It's very bearable. I don't mind it. It's cool for me for stocks anyways. But specifically for US markets, so I've never done any options trading with London markets. So yeah, just direct your question to me if there's something specific you want. There was some type of request for an options cost, but that was for like a massive corporate. And I haven't said yes or no because of how much time it takes for me to create a course. Right. So if you understand the futures market, like I said, then you actually understand, that they are always going to bet in the same direction as the actual currency of pair. All right. So that's something very important to keep in mind with, because if you know that, if you can read the futures data, follow the futures data, you are almost always certain that 9 out of 10 times those things are going to go in line. Right. So now let me bring this home. Let's look at a pair like USD CAD. All right. Let's see what we have here. All right. So I'm not going to use an example on the spreadsheet here right now. Just think with me for a second. If let's say you're buying CAD futures contract, so if 365 Trading Corporation actually gets a futures contract and we buy CAD, what I'm doing is I am betting that CAD is going to be strong. So if you see here, right, CAD long, it means there are, well, this example doesn't work because they're like 42 shorts. But let's just say there were more longs than shorts. It means I'm saying CAD is going to be strong. I am betting on CAD as an individual currency. which means if that is me betting on the CAD dollar to go up, I wouldn't then rush to go buy USD CAD, because those are not the same things. When I buy USD CAD, the currency pair, go to the whiteboard, just make sure I'm coming across very clearly. I'm saying to you, if I, on the futures contract, or if I come to the COT data and I see that there are more CAD longs, so some people are buying more CAD longs. There is 40,000 CAD longs and only 15,000 CAD shorts. And I add and I buy a CAD contract if I want, or just say the banks are buying CAD. Let's add another zero here for 40,000, right? So let's say that's the case. I would not then go buy USD CAD, because if I go buy USD CAD, I must be very careful of this. You must be, because remember, you are now saying when you buy USD CAD, you are betting on the dollar going up against the CAD. So buying CAD futures and buying USD CAD are not the same thing. One is saying CAD is going to go up, which is just simply buying CAD futures. Or when the longs on the CAD here are much more than the shorts, then CAD will go up. But going to physically buy USD CAD based on the misinterpretation of number one is dangerous, because actually when you buy USD CAD, you are betting on the currency that comes first. You are saying dollar is going to be strong, hence the buy, because CAD is going to be weak. And some way in this natural universe, the two opposing facts cannot exist, right? So either you're right here or you are right there. You can't be right both ways. You can't think CAD is going to go up and also buy USD CAD and think you're going to make money. All right, so that's a very important thing of understanding how this whole thing works. Now, in terms of terminology, I think I've already covered that, but just so we're very clear: commercial, non-commercial, hedge funds, banks, institutions, 365. I just put 365 there just to help you identify what you need to be focused on, right? Because non-commercials are people or traders who are speculating on the market's direction to make money. We only make money by speculating in which way charts are going to go, and therefore put money in that direction, and if we're right, we make money. Okay, that is non-commercials. Institutions do it, banks do it, etc., etc. Commercial positions are specific corporates who are hedging their positions. All right, so these are very large institutions, number one. Number two, they will have the most orders in the book. So this is called an order book, by the way. This is an order book. The large commercials will, generally speaking, will always have a big. So let's look for an example here. AUD, there are 32,496 positions long on the 7th of September, 2021. On the commercial side, there was a 116,000, almost 4 times this amount of longs. And here on the non-commercial, there was 102,000 sell positions. So as a 365 trader, I would have been like, AUD is most likely going to go down because there's a lot of sell. So you see, I've converted this, and this has been converted into percentages, but let me not jump the gun. I'll explain it as we go. But the point is, there's definitely more shorts here than longs. But when you come to the commercial side, you realize that there's more longs than shorts, all right? Because they are opposite. And the reason for that is commercial traders, these guys here from this whole section right up to the end there, commercial traders are institutions, large institutions that need to hedge against a cash position that they may have, or a physical product that actually happens sometimes. So like cotton, like I had to hedge on behalf of this farm company of farmers, a farming association in Bloemfontein in South Africa, because there were actual cotton planters, right, in the Free State there, and they needed their capital hedged, and they use option contracts to make money all the time. It happens all the time. There's some traders who like doing that kind of stuff, and it's good money. All right, now let's say to bring it home, let's say 365 Trading Corporation creates, and how do I make this make sense? Let me say I create another office in America, but I'm based in Africa,
And in America, I have 2,000 workers who are doing 365 marketing, media stuff. They're trading on gas, like a whole team, like an army of 365 people, but in the United States of America, and I am in South Africa. So my local currency is ZAR, the rand. There in America, their local currency is the dollar. The dollar is stronger than the rand, right? And has always been, as far as we all know. In fact, today, I think $1 buys 15 rands or something crazy like that. But the team that's in America is my team, and I'm their boss, which means I need to pay their salaries. Okay, you guys understand? So at some point in time, even because my head offices are in Africa and not in the United States, when it's now time to pay salaries for people staying and working in the United States, I need to pay those people in US dollars. Well, I'm in South Africa. That means for every $1 I need to give them, I must raise 15 rands this side. It's going to cost me a whole lot of money to pay 2,000 people their salary. So what I then do as a smart market person who has wages to pay in America is I will then take and look into the DXY futures in the futures market and buy dollar futures if I think the dollar is going to go up. So while everyone in the retail market is selling a short-term dip, I'm long on the futures, you see. So most of the times, if we're long more here, they might be long more, or they might even oppose, right? So let's look at an example. Let's look at CAD. CAD was long 36,000 orders, but short 42,000. But these guys were long 94 and short 100, right? So that particular difference is where I would make money, such that if my DXY futures make money in the long run, even if I have to raise 15 rands for $1 in South Africa to pay all my workers, I make money back through my futures contract, right? So it's a simple thing. They hedge against cash positions or an actual product, and this is to ensure that they offset any extra costs along the way. So you'll find big companies like Coca-Cola have traders who are hedging, oil companies, traders in-house who are hedging. It happens. Farmers, like I had a contract with these guys in 2020 for cotton, literally. With another one here on Transkai for coca. Coffee beans, citrus, like we try to infiltrate every space. But my point is, some people need hedging to make sure that no matter what happens, whether the farmer makes, we make money in the markets on their behalf. So these guys hedge. All right, cool. Now, looking more deeply at the spreadsheet, I want you to understand what's going on, because it's now your spreadsheet too. We have the name of the asset. We have long. Long means buy, short means sell. I got this from the COT reports. Copy and paste. It's nothing I'm making. What the sections with yellow means there's a formula in place. Don't fiddle with that. Do not fiddle. If someone wants an actual copy of the spreadsheet, because you want to tailor make it into your to fit your account balance and all that kind of stuff, feel free to let me know, and I'll send one to the mail list of registered students, right? Registered students only. I'll give it to you, but there will be one online in the remote course that I will update personally all the time. And it's important that one stays intact so that I know that if there's a mistake, it's me who made the mistake, right? So everything under yellow, so going from E, F, G, H, right? And wherever there are yellow headings, there's already formulas in place that you just copy and paste to calculate everything for you. Why? Because I want to know, fine, there are 32,496 long positions on AUD on the 7th of September, and there were 102,984 short or sell positions in AUD. So I already know that there's a bias to sell, all right? That's a given. But I also now need to know the total number of orders in the book, in the order book. So this formula here in total just adds this plus this, which is equal to this. This formula then helps me see quickly, where is the momentum? Where is the bias? What should I be doing as a trader? Should I look to buy or sell immediately? So it will tell you that this is the total of the number of orders all these brokers have received. They've received 135,000 big sell and buy orders. Banks are buying and selling all the time, but there's always, between the buy and sell, there's always going to be an imbalance module one that is created to push a currency in one specific direction. Cool. I want to know where that imbalance is going to fall to. when you're looking at charts from module 1 to module 2, you already know this. You know your governor is doing something. You follow your governor, right? But I'm teaching this like you're a green apple, like you've never seen me teach you module 1 or module 2. Well, some of you might not have, but those of you who have, that's exactly what we're doing here, right? So naturally speaking, the formulas here will calculate 32,496 of long position is what percentage of the total? Well, 32,000 of this is actually just 24%. So out of all the orders for AUD on the 7th of September, 24% of them were to buy. And out of all the orders of AUD on the 7th of September, 76% of them were to sell. Well, hello, you know, that's a no-brainer. Probably a good idea to look for sell positions when I get that data, but I need to see that momentum continue week on week, because I already know I'm 1 week behind with the COT due to how and when they release the data. Now, net positions is just the difference between the two, right? The difference between the longs and the shorts. There are 32,000 longs, there's 102,000 shorts. My net positions are negative because, like we've already ascertained, there's more selling. Negative is just selling. It's not negative like it's bad. It's just negative is sell, positive is buy. Right, so that's fine. With the commercial guys, I do the exact same thing. The commercials are going to hedge, most likely going to, at the end of the day, push the market towards their way against us who are speculating with the banks. Right, so they've got long and short. So add these two to get a total. It seems to me that for the commercial side, there's actually more longs than shorts. 78% of their total orders are trying to buy, and 22% of all their orders are trying to sell. And here, 24% are trying to buy, while 78% are trying to sell, and 76% are trying to sell here, while only 22% are trying to buy. You notice that they flipped it, and there's a 2% difference to keep the market at a consistent equilibrium. All right, and then the net positions is the difference, the adding of this plus that, and whatever else needs to be deducted, and then it comes from there. So this is like a simple formula. Don't touch this. Now, the difference is what I call a sentiment indicator. The difference is specifically the difference between the two net positions. This is a good sentiment. If I want to know which side the markets are going to dance on, and it's not an exact science, but if I wanted to guess which way they would lean to, this net position of non-commercial positions, the banks, 365 traders, hedge funds, and the net positions of hedge fund minus 70,480 positions added against 83,000, and the difference is 12,000. So now I know, okay, fine, I put it in green, right? This is probably going to be a pull, right? And sometimes you can see it happen on the chart, sometimes you can't. But the point is, if you remember that there's a 1 week lag, you can almost start to trace these things. So I'm going to open AUD. I'm going to see if we can make sense of this. Even though I feel like it's way too early to be ready to run into the charts. And there's like some notes I had for you guys as well to add to our conversation, which I think I've lost already, but that's perfectly fine. So let's find 7 September. I'll switch to the charts right now. I'm well aware I'm not looking at the charts. 7 September, 1, 2, 3, 4, 5, 6, 7. Because you see, if you don't see it this particular way, you're going to be very confused on how to use this. All right, so remember, this is just an introduction. I do a holistic teaching series in module 3 around COT, proper stuff. I'm just introducing so that some of you who want to run on free information can run it. Those of you who want to come learn, the link is down below to take our course. Right, so 15, 16, 17, 7. All right, sorry, I should be sharing. I really should be sharing the screen. So in front of you should be charts right now. And I'm looking at the AX index, because remember we're looking at AUD. And we just want to see the end result of the COT report. So somewhere here, ladies and gentlemen, is the 7th of September. 1, 2, 7. There, right there, that candlestick right there. And if those of you who are, you know, chart ready, who know how to read your charts, you know, indexes are an interesting indicator of currency strength. You will realize that we've got a big gap here.
right? We've got a big gap, and yeah, we can remove the gap and just see the flow of money and do something like this, right? Keep it clean. You'll see that there was a massive pump up, and then all of a sudden there was a sale literally from the 7th. So that's why I'm saying I need you to know what you're looking at on the spreadsheet. Literally from the 7th, price starts to fall. But Leroy, how come? The sentiment indicator was green. There were more orders left over because once again, I want to be very clear. You and I are going to trade in line with smart money, the banks who are regulating monetary policy for the exchange, right? So if you look here, your AUD on the 7th of September, you get a whole lot of more sell orders than longs. So the longs were building up, and they started to get reduced, right? From 11,000 to 36,700, then they reduced the longs here. Oh, sorry, this is just AUD right there. The difference is on that same week, there was almost 4 times the amount of sell orders. In fact, we said out of the total orders of that week for AUD, selling was 76% on the 7th. So when I go to the chart now on the 7th of September, and then I see for myself, damn, markets actually jumped down. They followed the 76. Now, a 365 trader, if you take a trade by then, remember the 7th of September is the Tuesday when the COT report comes out. This is important. I don't want new things. I don't want new systems. No. Skip to what we know. The 7th of September is Tuesday. The report only came out on the 10th of September, on the Friday weekend-ish, just before. So although the banks moved the market and announced their move on the 7th, as a retail trader, you only saw it on the 10th. So let's find the 10th on the charts. Show you the problem with COT traders. We are not COT traders. We are supply and demand traders. There it is there. On the 10th. Now, if you miss this, you are in trouble. If you miss selling here on the 10th, when it comes out, you're in trouble. A very good 365 trader, a really amazing, beautiful 365 trader is selling because price has arrived at a supply and the governor of AUD was always falling, which means you would have bought in on the sold on the 3rd of September. As markets were rushing like crazy, you would have found a valid supply that's in line with your multiple time frame policy and you would have jumped in first, because I guarantee you my spreadsheet starts on the 7th because I was trying to capture the last financial quarter. But if we go beyond that, COTs beyond that, we'll see that there were many signs to take this sell here. But even without those signs, we had a valid supply right there. You see how markets gap up? Remember I told you guys the difference between a pro gap and a novice gap? Look at now, this is normal candlesticks. You see how difficult it would have been for you. Very difficult here. It would have been for you to even know to sell on the 10th of September if you look at the actual normal chart, because there's a gap up, which the novice would assume it means there's a pump, but it's a jump into a supply just to push price down. Why is there a gap here? Because there is a misreading. Smart money has increased by 76% their sell orders, so naturally price drops. All right, so that's how I want you to be reading this generic spreadsheet of order flows, order blocks, right? Okay, I think I should do a part 2 of this, guys, because man, the stamina, you know, and I don't want to, like, the last 30 minutes of the video, I'm just completely low energy. I don't know what to do. But anyways, this whole thing continues. So I track it for you. 7 September, 14 September, 21 September. And I'm just I'm doing the same thing. I'm putting in the data, AUD, CAD, blah, 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 blah. I'm tracking it. Now, real quick, before you even go forward, let me see if I can power through for another 15 minutes. And then if the video needs to go beyond that, we'll stop it there and we'll do a part 2, because that's okay. It's okay to get the full information. Right, I've created what's known as an institutional based bias indicator. All my indicators do not involve lagging things, lagging tools, lagging software. I just follow real money order flow data. In my experience, and I'm going to ask you to trust me on this, it is not a good idea to bet money on a neutral bias. A neutral bias is when the percentage, you see this percentage that I've put for you here on long and short, and neutral bias to me is, if see there 53%, I would not have moved on that. I would not have cared. But as soon as they add
20% on top of more sell orders. That's what we call a very strong bias. So a strong long or a short bias. A strong long or a strong short bias is anything between 70% on. I start to pay attention on the 70%. But again, for me, remember COT lags 1 week behind. So you need to have a lot of them so you can start to predict the next one. So you wouldn't have mattered here at 19. Oh, no, this is a different currency, right? You wouldn't have mattered here. Sorry, I keep acting like it's a build-up, right? The build-up is in the next tab. Let me show you what I mean by the build-up. This entire chart here is just for AUD. The one we're looking at right now is a holistic COT of all the other assets, all right? Of all the other assets. And we're going to go to the next one right now. But I'm just saying, while we're still on this topic of AUD, I want you to understand the smart money bias. It's a bias indicator. At 50 to 69, there's just not enough money for me to get excited about. It's not convincing enough yet. But when they do 60 to 90, this color here, I start to go, okay, cool. There's a long or short bias. Markets are definitely moving in that way. And I check to see, is that way still in line with the governor? Yes, it is. Fantastic. At 70 to 79, I'm like, there's a strong bias. 70%, 76%, 72%, 70, that's strong. I'm starting to get ready, pending orders. I'm preparing. Like 80 to 100%, I'm very sure they're committed to that run, right? So I only bet money when price is within these two zones. Okay, I just want you to know this by now. And so what I created was a hot or cold indicator, which I didn't use in this particular chart here. But basically, it will look something like this. You see here, this is AUD. This is just all the AUDs from the 7th of September. So this is holistic data because it captures all the assets pairs in MyfxbooK. Then after that, I break them down into one by one. If you look at AUD by itself, if you look at it will be the same thing. So let's see here. 7 September, longs are 32,496. Holistic data, longs are 32,496. Shorts are 102,984, 7 September. AUD shorts are 102,984, right? So it's the same thing, but I've put it together now just to talk to each asset on its own, right? AUD, CAD, CFE, Euro AD. Watch this video again, man. Watch it many times until you get it. But I will keep coming back to this. And if you're a registered student, don't worry. Module 3 got you. We break it down nice and slow. All right. Now, there we go. So on the 7th of September, you can see there's a very strong bias. That's why I said this hot and cold indicator. I like using color codes because it immediately my eyes can tell. So a nice-ish, where's the right color? There we go. So 76 is telling me, look, man, these guys are strong on the short. So if you started selling from the 7th of September, look at this, the whole month of 7, they're increasing their shorts, they're increasing, and then they maintain a strong sell bias on the 9th of November, right? 78%, which means all these longs are smaller than the sell orders. The sell orders, the shorts are way more, right? So the percentages with the formulas are just easier to follow. But if you look at the orders themselves, you'll see even there, even till now, 11th of January, you see that there? 11th of January, which was last week now, they've put more pressure now on selling again, right? So I'm going to make that very strong bias. So that's AUD. As far as I can tell, in January today, there's a strong short side to it, right? So now let's see what the build-up will look like on the actual chart, because that's very, very, very important. Because I remember doing AUD USD in a lot of war rooms with you. I remember saying, even our technical brothers and sisters who don't trade supply and demand will tell you there's a massive head and shoulder up there somewhere. This is AUD USD. I remember this. I remember making good money out of it. I remember telling you to make money out of this. This thing has been bearish seemingly since the 10th of June. 2021. Why? Dollar was strong. Last year was the year for the dollar bulls. We tracked it very well together. If dollar is strong, risky assets fall. Euro fell. AUD fell. Pound fell. Blah, blah, blah. Blah, blah, blah. Now, if you are trading now and you're looking at AUD USD, your COT is giving you, I've created a nice hot or cold indicator for you. You can see for yourself, oh, okay, cool, where's the supply? All right, cool, there's a neckline here. All right, cool, new supply. Fibonacci, then price would bounce up just to fall down again. And look at this, it just tagged the latest supply. The latest supply was just tagged, ladies and gentlemen, complicated 365 candles. Those of you who've done the course, you'll know what those words mean. You see there, these two green candles right there? It's not how we would ideally want to draw them. I mean, something like this would be fine, right? The way I just taught you. The way I just taught you, stop loss somewhere there, the way I just taught you, or I've always taught you, area of competition mark, boom, it'll be pinged, tagged, and bagged. Right, but now let's look at these two candles here. Our 12th of November and 15 November. 12th of November and 15 November. Somebody remember those dates. 12th of November and 15 November. Why did we get green candles when we're selling? Let's do our module 1. But now let's go to the holistic data first. Let's scroll down to 12th of November. So I've got everything in there for you guys. It's ready, man. And I'll be adding it week to week. Right, so what's the closest to 12th November and 15 November? The closest Tuesday to 12th November and the 5th November is November the 16th. Let's look at AUD. So AUD on the 12th of November last year, is you can see all of a sudden, or not all of a sudden, 74%, which we know is an interesting number, right? It's a long or short, strong bias to the sell side. So AOD had this stuff, but we might get lost because now we're looking at all the other assets, right? So let's go to AOD as a whole. Let's go to 16 November because we want to see the build up. There's 16 November right there. Are you with me? Is everybody with me? Right there. We can see that there was a cooling off. Why? What do I mean by this? At some point in time here, on the 2nd of November, 83% of the total orders on the table were for selling, and then it dropped to 78, and then it dropped to 74. There's still a strong bias to the sell side, but they are slowing down the sell momentum, right? By the 16th of November, we had a situation where almost 75% of the total orders were going to sell. But Leroy, why are there two green candles there on the daily time frame on those 2 dates? Well, let's look at what's happening on the longs. We know the longs are not that big, but we can see that it starts off very weak. There's like 11,000 buy orders versus 98,000 sell orders. So you can see there blue and this type of blue. One is cooling, one is just cold. And then there is neutral bias. So all of a sudden my longs jump from 11,000 orders to 17,000 orders to buy, because banks buy and sell at the same time. Always on the same asset. That's how they internally hedge. The difference is they'll always be imbalanced to one side, and as a 365 trader you need to learn how to read it. Now all of a sudden from 11,000 sell orders to 17,000 11,000 buy orders to 17,000 buy orders. Basically there's a jump from 11,000 of the total orders being longs to about 15%, right? A big 15% jump. And then it jumps to 19,000. So see, can you see that there's momentum going up? So you look at the orange. Orange means momentum. There's a build up. Things are moving from 11%, 15, 16, 21. And all of a sudden, one of those 2-3 days where this momentum was building up, we get two green candles. 365 traders, welcome to the world of order flows, supply and demand, and order blocks, because that's how I always know. All of a sudden, I can now see, man, they're prepping the markets. We know for sure that there is a bias to sell, but now they're increasing their longs. Who are they trapping? Retail traders. Retail traders are like, the trend is over, let's go buy. They take those guys out. They create liquidity. They take those guys out. But number two, for these longs that they create, that act like honeybees, for those who are going to be dumb enough to buy, what are they? Because remember, look at me pointing at the charts. Let's go to the charts. Let's go to the charts, baby. I'm just teaching. I'm just flatly tired. I'm just flatly tired. Right. Let's do this. Let's do this. This is good. War rooms are so important because on the 1st of February, I go back live.
This is the chart. This is AUD. We've gone back in time now, and the date is the 15th of November. So all of a sudden, we know that since the 9th of November, they've been adding momentum on the buys, even though we know selling is important. You know what retail traders can see? And you guys take this for granted because I teach you this stuff. But I can tell you right now, retail traders are looking at different things too on the charts. Retail traders, God. See here. Ah, man, markets are so cruel. I don't mean to laugh. You see this line I've just drawn. Excuse me. Look, guys, look. You're supporting resistance, brothers and sisters, ne? There is a lot of reaction here. The price bounce became support, price broke out, fake out, went up, maintained. This price was a massive scene of resistance here. Price went down, price bounced up, then shot up, price bounced back, and then now here is price here. Who do you think saw this? A lot of retail traders, many of them saw this. I just drew a simple line and it's clear as day. They saw resistance. If the supply and demand trader was not well versed, could have also seen a demand. See, there's a 365 candle there and forgot about the big picture, the top-down analysis. So all those traders who are trading support and resistance, all those traders who are using silly indicators, and all those traders who have not mastered the basics of supply and demand are buying here. So price goes, boom, we found money, let's swallow it, let's buy, push price up. And banks have been preparing for that. Remember, if you go to the COT data, ladies and gentlemen, you gotta love this stuff, man, because when someone tells that markets are random, they're lying. If you go through the COT data, I can show you where they were very cool on their longs, but I can also start to show you where they start to plant the trap. On the 26th of November, they start to all of a sudden increase a little bit more their longs. They are building you up for failure. 26th October. I'm going to try and find it on the charts. 26th October, where are you? It's in a supply. It doesn't even make sense. It's literally 3 green candles in a supply. They literally build in a trap. The following week, more momentum up, more momentum. By the time price gets to that level that I just showed you on the chart, retail traders believe they now have all the confirmation in the world to buy. Do you see how close we are to an uptrend line? Do you see this uptrend line? Do you see how close we are? Anyone would believe it's time for a buy. Anyone. They got 1, 2, got an uptrend. It's ready as a support. So what do? What do you think retail traders did? I'll tell you right now what they all did. I'll tell you right now, they believed that this was a perfect buying zone. Let's make it red. Sorry, my office allows for the sun to set in my face like this. So it's getting a little bit interesting to see. Right, so there it is. That was their buying zone, right there in red. I hope I'm sharing the screen. This is so good, man. I never prepare like, you know, like I'm gonna say this and this just so the markets can also entertain me. I find this so nice. Look at that. So now let me remove my yellow zone here. So any retail trader who has not been taught correctly, millions of them, to be honest with you, would have wanted to buy there, and where would be their stop loss? Underneath the uptrend. Why would your stop loss be underneath the uptrend? Because every single retail trading textbook tells you, well, you got a supporting uptrend. You got a support. Put your stop loss there. Price is going back up, right? But we know that smart money moves the markets. The sentiment is still sell. Your governor is still selling, has been selling for the longest. This has been clear in every single war room. So what do you think happened to these people? Well, they got smoked. They just got smoked, right? As simple as that, right? So that's how I think for an introduction, guys, because I don't wanna spend forever on this stuff. I've messed up my beautiful chart. Now it's gonna look like I had a bad trade call, which I did not. Right. So if the governor wants to sell, well, it's a bit too late because the sell has already happened. The sell is here, and you saw that with the current latest COT report, they've gone up again with their sell order, really trying to maintain a long-term sell momentum. Price has broken the other side of a faulty retail trader trend line, so we're going down. Why? Dollar is still going up. Why should we expect anything, significantly less. So, sorry, I'm just trying to block the sun, man. My videos are the most, they're just so natural, they're so disorganized, so me, so I'm happy. Right, anyway, so there it is there. So that's how you use COT, reporting. I'm sure there are a couple of more things I'd like to tell you about them, all right? But essentially, we're watching the build-up. So now we know that the orders are back to the sell side because price is not done. Remember, price only gets done when a governor kisses another governor. Governing supply kisses a governing demand. It's all in module 1 and module 2. All the lectures are there. It's perfect. It is my greatest teaching series work. It's good 8 weeks, well worth your time, undervalued. Today in the podcast, it was interesting because we came up with, in chapter 6 of the podcast, we spoke about how you should try always avoid, you cannot give a person more in cash value than you take from him, right? And that's just pretty much how my academy is built. You pay literally a fraction of what that information is worth to you. So I would highly suggest you take the course if you haven't, right? So basically, because the only other thing that I think will be important, maybe for those of you who won't take the course and you want to learn a bit more about COT, is I've got something else that I've designed, by the way, and I thought we we're going to build this together, but maybe I'll do a part 2. But as you guys can see, the spreadsheet is ready. I mean, I was gonna only put in last week's data with you guys, but it's just a simple copy and paste. Maybe I'll do it in a part 2. Pound, JPY, all this stuff is cooked and ready. The DXY, look at this. Remember how crazy I was about the longs when it hit the governor? Look, dollar has been buying even before the election, 7 September, going up. There were many times we sold and made money, but the direction was always long, right? Gold, copper, silver, I got you. I got everything, right? So let me do a part 2 on this stuff, guys. At some point in time, maybe tomorrow, right? Tomorrow is Monday, but please note the next video I'm gonna drop, because I promised this first, you must have this first. Next video I'm gonna drop is on AUD, NZD, CAD, JPY, Euro, JPY, Pound, CAD, NZD, Swiss franc, gold, and Nasdaq, right? Because we need to consolidate the stuff. You can see the stock market struggled last year because crypto was blooming, right? But still, there's just momentum. Right, momentum has been building up. So we'll see if the January effect is going to hold true, etc. Right. So then maybe in the next video I'm going to teach you in part 2 about what I call my 13 weekly moving average. It is not an indicator. It's literally based on this data. And I think I should create a tab in the spreadsheet here for all of that stuff. But I think, guys, for one video, that's massive mouthful. I hope you understand why it was important. Just to recap, got a trading clusters. This is important. You need this. It's non-negotiable. I'm telling you this year, I'm going to be strict, a little strict, student, a little strict. I want to see this. If I'm taking the time to make this and make it for free, you cannot tell me you still believe some of you paid $180 or $200. You cannot tell me this doesn't cover any of this stuff. I really want to see you trying, because that's all it takes is for you to align yourself with a purpose, vision, and a plan and go for it. Okay, guys, some of you students, you owe me a beautiful trading balance at the end of the year. And I want to be every part of your journey with you. I want to do this with you. So you're going to track me as you track yourself. You're going to follow the leader, but become your own leader type of situation. Right. So just a recap, you got to get this done. Rewatch the first part of that video, trading in clusters. It's absolutely important. Someone once asked me to put titles in my YouTube videos. I like the suggestion. I wish people knew how little time I have, but I can look into that. Then number 2, pending order list, how that works, why it's important. Number 3, a trading journal, which all registered students have. Number 4, COT data, the holistic side of it. So this is just to see how markets have been moving currency by currency. And you can see here, the sentiment indicator will almost tell you automatically. In CAD, in the month of September, generally it was pushed to the downside because oil was going through what it was going through. I don't remember. You will have to go through the chart, but you can see it's a sentiment, right? It continues for the whole month, continues for the whole month. When it comes to October, I'm just looking at CAD, it continues and continues. So things that go up remain up, things that go down remain down, but after a while, there's a change. So having a holistic outlook like this, and you just keep building, it makes sense. When it goes up to the remote course, I'll then color in buys and longs and etc., just so it makes more sense. And then after that, we've got CAD, AUD, everything, all the same assets we're looking at, Swiss franc, etc., etc. I mean, I told you guys we're very short on this thing, so of course the institutions were very long on it, etc. Right? So hopefully this was useful to you guys. Hopefully you guys got something out of this. I'm just rushing to take a break so I can start to film another video for you around those assets that I've announced. Now we're going to go to the charts now and map out supply, demand, buy here, sell here, etc., etc. But this video for me is fundamentally important as a content creator, as the head trader of 365, because I want all students to be moving in this direction. We have to take our trading accounts as professionals. You're not going to start trading professionally when it's now 10,000 US dollars. Trade that 100 US dollars as professionally as possible. Follow all the rules. Log in all the details. Have a journal. Trade in classes. You trade 100 US dollars professionally. I don't care what anyone says. 0.01 can grow. It will grow. It will grow. It will grow. You'll find yourself doing 0.02. You'll then 0.03. Next thing you know, you got 1,000 US dollars and you're on 0.10. That's how it's meant to be. It is not trading to always blow your account because you funded with $10 and you made 2 mistakes and the account is gone. Retail traders might think it is. They will make fun of us when we correct these mistakes. We don't care about that. At the end of the day, financial freedom speaks for itself. Do things the right way. We're starting the year now, 16th January, War Room number 45. Shake my hand if you watched to the end. If you watched to the end, please let me know. Please let me know. Literally, if you didn't like, didn't want to comment, but you watched till the very end, please type I watched to the very end. I'd appreciate that, just so I know. Shake my hand, guys. Thank you so much for being with me. Look out for the next video. Subscribe to the podcast on Spotify, Anchor. It's there on the YouTube channel. The podcast every day in the morning. I'll have something for you, something to get you to think about, because you become what you think about most of the time. Shake my hand. Once we're done with this stuff, guys, we got to go make money now. Cheers. Thank you, everybody. Have a beautiful day and a week ahead. 365. Peace.